To Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have our weekly strategy roundtable discussion where we talk about current market conditions, any questions you might have about subscription, what to expect short term, what to expect long term, and answer any other questions you might have. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first inside of your questions. Always want to welcome new subscribers. I've been trading my own money for over 15 years, mentoring and teaching subscribers how to trade stock and options. And finally, I have a master's degree in computer science, specializing in statistics and artificial intelligence. Quick announcement, YouTube, if you guys have time, or please sign up for our channel. We do have live discussions. Let's see. So you can always to YouTube. All right, just give me 1 second. To encourage you to join our channel, we do have on Wednesday morning bell and closing bell. You can actually participate live in the strategy roundtable. So I encourage you to do that. First, trader, welcome. All right, so all right, so also disclosures, very important. Trading stock and options involves a risk and not suitable for everyone. You must be aware of the risk and be willing to accept it before investing. If you're new to trading stock and options, I encourage you to visit optionsclearing.com to understand the risks associated with trading stock and options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level. For general education information purposes only, please consult your financial advisor prior to making any trading decisions. Also, should not be assumed that the future trade picks will be profitable or will equal past performance. And you can see the relationship between Tradespoon and trading block on the bottom of your screen. All right, before we jump into a trading plan, let's go over current market conditions. I'm looking at the spiders. Let's look at the spiders. Again, fluctuating between gains and losses since this gap, the 17th in the beginning of the week, right? We had a reversal after the CPI print, and then a rebound. So we've been trading basically in the range between the high is 375 and the lows are 350, right? So somewhere between 350 and 375, which would be 50% retracement. Yeah, so if we do the high and we do the lows, we're basically retesting 50% retracement and the gap, right? So 50% retracement and the gap. So far, bulls were able to successfully hold on to this level. So we're trading in the range. It's clearly building the bottom, right? We're in the process of building this bottom. We had first reactionary low, right? Breaking the June-July lows, 357, and then a lower high, right? And the question is, will we hold this level, right? And kind of have this triple bottom, head and shoulders. And overhead resistance is 380, right? 38% retracement. and for multiple timelines, if you look at the months, weekly or daily. So we're trading in the range between 380 and 350. It's been, a few weeks. If the market is going to close above this low, right, above the gap, 363, 364, I would say it's a win for the bulls, right? Because if you look at the weekly chart, we're going to continue, we're continue to build the bottom, heading into the midterm elections. So at some point, the market will break, right? This is a bottoming process, very similar to the bottoming process we had in June, July, right? We were trading in this range between 360 and 390, 30 points. Here it's 380, 350, 30 points. It took, probably a month to build the bottom, then eventually we broke to the upside, right? So the question is, as we're heading into midterm elections, I think early voting is actually starting soon, right? And next week, or right, next weekend. Not this weekend, but next weekend, end of October is early voting. The question is, are we going to break to the upside, or will the market break to the downside? So that's would be the most important question for the end of this year, right? If we break to the downside, then we are going to pull. Market is going to probably capitulate, and we're not going to have a Christmas rally, right? Market is going to continue going lower. Or if we do have break to the upside, then we're going to have a Christmas rally and kind of a potentially strong rally, right? November, December, 2 months, kind of similar to July, end of August rally. And you were 15 to 20%, right? Spiders and then move 20%. So it could be, from the bottom 350 to 450 points is about 15% rally. So 15 to 20% rally. So that's one scenario number one. Scenario number two, something happens in the market, right? Some dislocations. Everybody's concerned about, rightfully so, in credit markets, right? It's all about yield. If we do have some kind of, lack of liquidity or crisis or, Credit Suisse defaults or something along those lines, then, market breaks to the downside. So those are the two scenarios I can see, right? Trading in the range for the next, for probably next week, next 2 weeks, right? Next week or following the couple of weeks following the midterm election, then scenario one or scenario two. So how many of you think we're gonna go to the scenario one, and how many of you think scenario two, right? That's the most important question to say. You know that we're not going to trade here forever, right? Just like in June, July, right? So we're either going to break to the upside, or we could have something like we've had in, in May, June, after midterm election. Maybe the first reactionary is higher, right? Maybe another 5%, but then steep pullback, right? So that would be scenario number one. Right, sorry, scenario number two, right? Scenario number two could end up like this, right? Similar to what we had in May, June, or it could be July, August, right, where it's heading higher. So those are the two scenarios. Let's type in one or two. Good morning, Mark. How are you? No worries. One. We're talking about end of the year, right? End of the year. So the first question is end of the year, right? Right, end of the year. Scenario one or two. All right, trader one, marked one. Good morning, one. All right, everybody's one. That's interesting. Yesterday we had the same question. Everybody said two. Okay. That's interesting. It must be because it's all green right now. Okay, fine. So one, very interesting observation. I agree with one. I'm gonna put down two. I think, it looks like Republicans have a high probability chance, right? High probability chance to kind of control the Senate and the House. And I think that would be a bull, since that's the high probability, and that would be the usually, right? I think in the past 80 years, in the past 80 years after midterm elections, we do have a rally. So I'm going to make an assumption that this time is not different, even though we never, we haven't had this high inflation. Global inflation is over 10%. Last time it happened in 70s and 80s, so it is different. But I'm going to assume that that would be a positive catalyst in the market, and it's 1. So my opinion is 1, right? I would say 70% confidence it's 1, 30% confidence it's 2. What does it mean for me? That means that I'm buying on pullbacks. Every time market drops, 363, 360, 357, 350, these are all levels that it makes sense to add to your position. And then the second question, right? We'll call first half, right? Let's talk about the first half of 2023, right? One scenario, let's say we did do 1, right? The other, we went from 360 to 440 points. We're going 40 points higher first half, right? And we end up at 1 sometime between, January and June of 2023, or we reverse down after heading into the 400. We reverse down to 350, and what did I say? So from 370 to that's 70 points higher. This is 70 points lower to 300, right? So same thing. Are we heading toward 300 or are we heading toward 440? Right, 440 in the next 4 to 6 months. So Mark 2. All right. Anyone else? Next 4 to 6 months, will we be closer to 440 or will we be closer to 300? Trader 2. Anyone else? Kapka, Mark, Tom, Bravos. All right. I have a few people that says trader, so I can't really say. A lot less answers. Too. Okay. So we're heading to 2, right? And that is my opinion also, right? So we have Christmas rally, similar rallies that we had. We had multiple rallies last year. In the bear market, there's no reason to assume that we're not going to have any rallies, in the next 6 months, and it's just kind of capitulation. So yes, we're going higher, I don't know, 10 to 20%, and then we're going lower. So again, does it have to be this way? It doesn't have to be, right? In year end, 2 can happen too, right? If something happens in the market. And 2, it doesn't have to be 2, it could be 1, right? I mean, I think this is a much lower probability event, but the probability is there, right? If we're in soft landing, right? If we're in soft landing, we're not going to get to 300, right? Then 350 is probably the bottom, or very close. Maybe 345, maybe 340. But if it's soft landing and Fed will pivot and inflation is going to, significantly drop towards the end of this year or early next year, then we're not going to have scenario 2, right? So, but trading is about creating an opinion, right? Having an opinion, making research, listening to research from different sources, framing your opinion, and then invest based on that opinion. Sometimes you'll be right, sometimes you'll be wrong. But the next question, once you decide on the opinion, which way the market is heading, right, is concentrating on things that you can control, right? What can we control? One is number of positions, right? So I propose to have no more than 4 positions. By definition, we are trading in a bear market, right? Pattern of lower highs and lower lows in the past, 10 months, probably going to continue that in the next 6 to 8 months. So for that reason, since all the asset classes are highly correlated, I propose to have no more than 4 positions, and the maximum account risk is 2.5%, right? No more than 2.5% risk of account value. So those things we can control, and the cash, right? So 50% of your portfolio in cash, no more than 4 positions, 2.5% of account value. Cash is very easy decision, right? You look at your balances in your broker dealer, and if it says you have 50% of your portfolio in cash, then that's how much you have. All right. The second is number of positions. 4 is also very simple, right? You just count 4 positions. I mean, 4 underline, right? If you have 2 spreads in JP Morgan, it's still 1 position, right? Because you're either bullish or bearish or neutral, but it's 1 position. So 4 positions, 2.5%. What does it mean? That at any given point, the maximum drawdown is 10%, right? If you multiply these numbers, that's your portfolio drawdown of 10%. Why 10% is important to me? It's an average, right? For some people, they could be more aggressively, maybe it's 15%. For some people, maybe it's 5%, right? It just depends on your risk tolerance level, right? Where you are on, think about, risk, it's a spectrum, right? You can be risk averse, right? Versus, risk taker, right? I don't know where you are, but I'm going to say in the middle, 10%, right? If you like to take risk, maybe it's 20%. If you don't like to take risk, maybe it's 5%. But this is your trigger point where, if you're down more than your, tolerance level, right? Let's assume it's 10%. If you're down, let's say 20% or 30%, this is when you get nervous and you make, decisions most likely based on emotions. And the idea is to avoid that. How do you avoid that? Well, you count number of positions times 2.5. Usually the question is, well, that's 10%, right? That's 10% of my portfolio, right? Especially if I trade options. What do I do with the 90%? The rest of the 90%? I mean, you can, I guess invest into treasuries, right? Treasury paying you 4%. So if you don't need this money for the next 2 years, you invest into treasuries, some of that amount. Or if you think that the market will capitulate at some point, right? In the next, let's say 6 to 12 months, market will reach the bottom, right? Average recession, top to bottom, market is down 40%, right? So right now S&P is down 25%. If S&P is down another 15%, 40, 45, well, then you take that 90% cash and you start deploying it, right? You start deploying it and you buy equities, right? And the idea is that right now, the reason 90% cash is okay because it's a trader's market, right? When you invest and you have 90% cash, you're a long-term investor, yes, maybe that's not an average cash position. Average cash position is 30%, right? But the reason you do 90% because this is not a investable market, right? This is not a buy and hold market. This is a market where you have to trade it, right? With support, resistance level, target gain, stop loss. You have to be disciplined and you have to be not risk more than 10%. Because if you end up on the wrong side of the trade, right? And we have these 10% pullbacks almost every month, right? Every month we have 10% rally, 10% sell-off. If you're down more than 10%, right? 20%, 30%, it's very hard to recover, right? That's why majority of the people after bear market, they never trade, right? Our goal is to make sure that we come out of this bear market stronger, more disciplined, and better traders, right? So for that reason, you have to have rules and you should not break them, right? You should, the most common mistake is to take from a trader become an investor, right? You have 4 positions, 2.5%, and all of a sudden you say, well, I like JP Morgan, I like Tesla, I'm gonna wait longer. They're not going anywhere. And now you have 4 positions instead of 2.5%, you're down 5%, right? So you're down 20%, right? And then, if we have capitulation, maybe you're down 40%. So that's the problem, right? So, converting from, trades into investment is a problem in the bear market, and I encourage you not to do that. How do you determine 2.5% of account value? In the trader's market, you have to, technical analysis is very important, right? You can't ignore technical analysis. So right now, let's say most of you said bullish, right? Yesterday, everybody said bearish, so I'm not sure why, but okay, most of you said bullish. Okay, so let's say you agree that we're gonna get to 400. Well, 367 to 400, that's 33 points. That's 8% rally, right? 8% rally is significant enough, right? So let's say you buy at 368. Then the second question that goes through my mind is always, where's my journal, right? Let me pull up my journal and start documenting. And you go through the visual negative and positive visualization, right? The positive visualization, you are making 8%, and market will be 400, you know, after Thanksgiving, right? Let's after Thanksgiving, we're at 400. Right, the other, so that's positive visualization, right? You're making 32 points, right? That's your target. You basically look at stock forecast toolbox, right? Right, this is neural network model. It learns on the data and it basically projects that we could reach 400 level, right? In the next few months, we can get to 400 level. And sometimes we're overshot. Okay, so then it makes sense. You basically say, okay, I agree, 32 points, 8% rally. How many shares do I buy? Do I buy, and I go through my rules, right? The first rule, okay, do I have 50% in cash? Yes. Okay, I can do it. Do I have 4 positions? If yes, then I cannot add number 5 position, right? If no, if I have 3 positions, okay, then I add the next position, right? Then the next question in the journal is, how many shares do I buy? Well, where's your stop loss? Well, your stop loss is 350, right? That's the low, right? That's the 50% retracement. If you do weekly chart, a bull market versus bear market, this is a 50% retracement, right? 350 is a 50% retracement. Let me see, why don't I see that? Yeah, so if you plot, pandemic low to pandemic high, we basically 50% retracement, right? So we basically lost all of the gains since the presidential elections, right? So pre-pandemic, right? So since November 21, or since before the pandemic started. So 50% of the gains are gone. So you know that if we break through the 350, market can capitulate very quickly. Model basically says 337. I have a feeling that if we do break through this level, probably we're not going to stop at 337. More likely than not, we can drop to 320. So pretty big drop. We can drop quickly, either 5 or 10% below 350. So you probably don't want to, if we see market below 350 for a couple of days, right, or a week, you probably don't want to stay in that long position. So your downside is about, let's call it 347, 20 points, right? 20 points, right? So you're looking to make 32 points versus risking 22 points, right? That's your positive and negative visualization. You have to make it real, right? You have to kind of close your eyes and experience, right? Go into, after Thanksgiving, and, is the market at 400 or is the market at, 335, right? So now that you decided what the stop loss and target gains are, how many shares can you do? Again, the goal is not to lose more than $250 per trade. And it doesn't matter if it's an option trade or a stock trade or a Forex trade or a Bitcoin trade or futures on options, doesn't really matter, right? However volatile asset class do you find, whatever, your risk tolerance, search for volatility, the risk is $250. So if your downside risk is 20 points, then, how many shares can you buy? 12 shares, right? So you can buy 12 shares of us, 12 shares. If you're trading options, can you sell one contract? You cannot, right? So you'd have to do a spread, right? You have to do a spread where the maximum loss is $250, right? Maybe you sell, 350 put and 340 put, right? You collect, $250. But if the trade goes against you, $250, then you would close out the trade. So that's a very important concept. I encourage you to always kind of keep an eye on that. Let me see. Any questions on these calculations? So this is important, right? 32 points up. So this is the stop loss, right? Determining the stop loss. What are the most common mistakes? One of the most common mistakes is not to treat stock options as a derivative of stocks, right? Being over leveraged. Sometimes, if you depending on your account size, it might not be appropriate for you to trade certain strike prices. So let's look at the Schlumberger trade, right? So I'm doing earnings trade, right? This, I did Johnson & Johnson in the last 7 days, right? Selling iron condors. So I sold the iron condor for, right? The idea of what strategies work in the current market conditions, strategies where you identify certain range, right? Johnson & Johnson, once I sold 172.5 call, I sold 162.60 put, right? This bracket is basically is the range, right? If you look at the bell-shaped distribution curve, basically saying that there is a 2 sigma move, right? That it will reach 172 or 160, or you can do 1 sigma move, depending how much premium you want to collect, right? And you collecting the premium, right? So 30 cents plus 30 cents is 60 cents on the $160 stock. It's about 40 basis points. Right? If you want more premium, I could have collected 60 cents and 60 cents, almost 1%, but then I would have to trade 1 sigma move, right? Which would happen more often. I wanted to trade something that is less often. So this is an important concept, right? This is what trading options and stock is all about, right? You determine. When you trade, you basically determine by certain time frame, let's say this Friday, the stock will trade in 172 and 160 range. So now you have your return, right? Return on investment, right? We always want higher return on investment, right? A lot of people say, well, Vlad, 30 cents plus 30 cents, 60 cents, one contract, I made $60. It's not going to make a difference in my life, right? You have to pay for coffee almost $60 so that you're going, with your family. So, but $60, on what the maximum risk is, $10, right? That's 6%, right? If you can make 6% return, right, by holding position overnight, that compounds, right? So don't underestimate 0.5% return. But if you want higher, not a problem. The only thing you have to keep in mind, your probability of success will decrease, right? There is no, unless you have some kind of an edge, technology edge, or some kind of alpha edge where most retail investors do not, right? If you want higher returns, that means your probability of success will decrease, right? So then it again becomes not what's right or wrong, but account size, right? If you do 1 contract, it's $60. If you do 10 contracts, well, it's $600. So, so it depends on account size, return on investment, and probability of success, right? So you determine certain time, certain range, and, that's 50% of all the volume are weekly options. So everybody's trading weekly options, either trading ETFs like QQQ and Spiders. You can do the same trade on QQQ and Spiders. Right, Spiders, every 3, there is midweek expiration weekly, right? Everybody's trading, Tuesday and or Wednesday and Friday expirations. Or a lot of people are not comfortable because market has been volatile. They're not comfortable, making decision by end of the week. So they're doing monthlies, right? They would trade November contracts, right? Maybe, or calendar spreads. Maybe short is October, front months, or weeklies, but the long-term hedge would be longer dated options. And both, a lot of it just what's your, risk aversion is, right? So that's what the trading is all about. So return on investment, probability of success. I would always keep that in mind when you set up these trades, right? I would always keep in mind compounding investment, right? For me, 0.5% is great. 0.5% to 1% return. If I hold a position for 1 or 2 days, I can't get it anywhere, right? I can go to a bank, put it in treasuries, I get 4% a year. So if I can get 0.5% a day, well, that's great, right? And it compounds, right? Compounding investment, right? If you make 0.5%, right? let's say you do 3 trades, you make 0.5%, 1 trade, you lost 0.5%, then 1 week, that's my goal, right? 75% accuracy. So 3 out of 4 trades successful. Then you make 3 times, 3 successful trades where you made money, and then 1 unsuccessful trade where you lost money, right? So 3 trades, 0.5% is 1.5 minus half. In 1 week I can make 1%, right? That's my goal. That means in 1 month I can make 12%. Sorry, 4% multiplied by 4, and then 1 year potentially I can make 48%, right? If in a down market I can make 48% return, I'm a superstar. 1% of all the money managers or professional traders can make 48% return in a year. So 0.5% is significant, right? Compounding investment. This concept is extremely important. And the third time is managing your losing trades, right? Managing your losing trades, because if you make 0.5% on 3 trades, but you lost 2% on the second trade, then that's a problem, right? So here's an example of Schlumberger. And again, looking at the strike price, right? Schlumberger is trading against me, right? I sold the 48 call, right? I sold the 48 call. Sorry, 48.5 call. And the stock is trading at this overhead resistance, and it was as high as 49, right? So the trade is against me. So I can take a loss of 50 cents, right, and be down for that position, right, 1%, right, be down 1%. Or I can try to repair the trade. How do you repair the trade? I'm buying basically cover call. I have 48.5 call that I'm short. I sold 8 cents. For the call, sold 10 cents for the put. So I'm collected 18 cents, right? I collected 18 cents. And now I bought a stock for 48.58. So there is a lot of premium in these options, right? The options 48.5 call is trading at 54 cents. So there is 1% premium in the options that expired today. So I'm just waiting for that premium to disappear, right? But in order for me to do this contract, I'm trading one contract, right? 100 shares times 48.50. I'm trading $4,800, right? To do these short-term strategies, you need at least, I don't know, $5,000 to $10,000. You don't want to trade on margin, right? The idea is to close this trade by the end of the day, right? That would be ideal situation. And $4,800 is manageable, right? On a $5,000 or $10,000 portfolio. If you have $500 in your portfolio, then it's not manageable, right? You can't, nobody's going to, usually you need at least, was it 50% requirement, right? So you need to have $2,400 in your account, and right, so at least $2,400. So if you have $500, then this trade, you can't do this trade, right, because of the strike price. So strike price do matter, right? The strike price does matter, right? When you buy in one contract of Schlumberger, that's $4,800, right? When I did Johnson & Johnson, well, it's $17,000, right? So it requires bigger account, 3 times bigger, 4 times bigger, right? 4,000 versus 16,000. So 4 times bigger account. So when you trade options, you have to keep in mind they're a derivative of the stocks, and you trade in different amount. And when you repair these trades, especially with cover calls or even not cover calls, it requires capital. So for some accounts, maybe $172 stock is not right. So you have to trade stocks like FCX, right? I traded FCX, right? It's a $30 stock. So, okay, so then it's only $3,000, but Johnson & Johnson, I cannot. So you want to figure out for your own portfolio, for your own risk tolerance level, what is the right size of the trade? And you always translate it into equity. Maybe you should never trade stocks above $100, right? A lot of people say, don't trade stocks under $10. Well, most of the liquid stocks are above $10. So $10 is probably not, but you can say 30, no more than $30, no more than 50, no more than 100, no more than 200. A lot of this depends on your risk tolerance level, and the most important is your account size, right? For some account sizes, it's inappropriate to trade, Johnson & Johnson $150 stock. Any questions? Very important topic. Let's just make sure we all, this makes sense. Any questions? No. All right. So those are some of the keys, takeaways that I would, take out of this discussion. Let's just write them down. So one takeaway is I would journal, right? I encourage you to journal, and I encourage you to participate in the live trading room, right? You can do this on YouTube without any financial commitment every Wednesday. You can, if you participate in Elite Circle, you can do this every morning. I'm gonna make, I will challenge you to say that if you do this, and you can look at our reviews right online, but if you participate for 3 months, either in every week, either on YouTube or in Elite Circle, and you compare your performance, 3 months before or 3 months after, you will, your performance is going to improve. Your performance is going to improve. So if you do the journaling and you participate in a live trading room, for 3 months, your performance is going to improve, right? And if you don't, let me know. We'll be happy to refund the money, right? If you do decide to go with Elite Circle, or at least, I'll be more than happy to review what went wrong. So journaling, live trading room, cash, right? We want to remember to do the cash, right? 50%. And this should be like, a binding document, right? You should treat trading as if it's business. It is a business, right? You should treat trading as business. So every business have articles of incorporation, or they have, what is it called? Business plan, right? And you write this down, right? Operating agreement, right? In your operating agreement, you need to write things down, and banks will ask you, if you want to get a loan, you have to give them that paperwork. So if I see on your street, you have to give me a paperwork of your trading plan. So I encourage you to write this down, and just say, I'm going to journal every day. Journal, what is journal going to consist of, right? I'm going to participate in live trading room. I'm going to put it on my calendar. I'm going to sign the paperwork, every Wednesday, at least morning Wednesday, either going to look at it live, or I'm going to, review the recordings from the YouTube. Then you write down, I will always have, in a bear market, always 50% of my portfolio in cash. In the bull market, I will always have 30% of my portfolio in cash, right? You write this down. I commit not to have more than 4 positions, right? I mean, if you're relatively new, if you're managing large portfolio and you've been doing this for multiple years, okay, maybe 6, okay, fine. But something along those lines, right? Whatever that means, And then I'm committing not to ever lose more than 2.5% of account value. I don't really care who's going to be the next Prime Minister of England. I don't care, if there's lack of liquidity in the, bond market, or if, we will not have a Christmas rally. But no matter what, if I'm down more than 2.5%, I'm out, right? No matter what my opinion on the market is, right? Because opinion, a lot of it is hope, right? A lot of it is detailed research. A lot of it is just hope, right? So you don't want to, on a hope, lose more than 2.5%. On hope, you can lose 1%, 0.5%, but not more than 2.5%. So I believe if you do these are the 5 takeaways from today's session. If you write them down, you keep them in a journal, and you commit to participate next 3 months, I think I'm confident that your performance is going to improve. All right, any questions? Call spread, well, I do have 33. Hold on. I do have 33.5 call spread. I mean, I assume it's gonna expire worthless, right? 33.5. Maybe let me see. Good question. Maybe it makes sense to close because most likely it's not gonna get to. Oh, sorry, it's FCX. We're talking about Schlumberger. 48.5. What did I buy? 52 call. 52 call right now probably worthless, right? Yeah, 52 call is worthless. So I can't really close it. So my goal is to close 48.5 call and the stock by end of the day. Right now, the problem it's trading at 48.50 and there's 40 cents, 1% premium, right? So I can close the trade and take a loss, right? I can, stock is flat, I'm down 42 cents and I collected 10 cents, right? So I'm down 32 cents. So I can either close it and take a loss of $30, right? A little bit less than 1%, which is okay. Or I wait and actually make it a profitable trade because, if by the end of the day it closes at this level, then I'm actually going to be profitable. My risk is to the downside if we have a reversal, right? If Schlumberger all of a sudden reverses to the downside, right, and pulls back, right, it dropped to 48, right? If it closes, let's say at 48, then I'm going to be down, right? Because I bought the stock at 48.5 and it closes, let's say 48 or 47, right? Then I'm down, 50 cents or $50 or $100, right? Then I have to make a decision, right? If I think that, Schlumberger had better than expected earnings, right? And, potentially can reach, at least, 52-week high, then maybe I hold the stock and maybe I sell options into the next Friday, right? But I have to have cash, right? And I have to have an account, right? Because my downside, let's say right now, I mean, it can ease, the 52-week low, not this low, sorry. My downside is probably 46, right? The gap. Schlumberger can reverse and, close the gap on Monday. So my downside risk would be, $200. So, is it within $250? Okay, fine. If it is, then maybe that's the trade, right? I would close the short call, for profit, and the stock is down, and then I would sell, next week, next Friday expiration call. So those are some of the options. As long as it trades above 48.5, I'm making money, right? The time is on my side. Every hour, the options will lose money, right? This option every hour between now and 3 p.m. Central, you'll go from 42 cents, 32 cents, 22 cents, 10 cents, right? But, so join Elite Circle, and at the closing bell, we'll make a decision how to treat this trade. Any other questions? So I encourage you to participate in, definitely on YouTube. Please click like, I like likes, YouTube likes. If you find this content useful, information useful, please, if you're part of any blog or any communities, share it. I encourage you to be part of the community and not to trade on your own, right? That's very important, not to trade on your own. Being part of the community, being part of, be able to ask questions, listen to others' questions I think is extremely important. All right, any other questions? Give you a little bit of time to think about the questions. Meanwhile, Spiders is trading. Look at the Spider, some of the earnings. Spiders fluctuating between gains and losses, but it looks like it's holding this gap for now, 360, 387. AXP had a negative earnings, all right, down 7%. Verizon is down 7%. CSX is up. Schlumberger, strong performance. FC Copper looks like recovering. up 6% after the earnings. We had good earnings from JP Morgan. JP Morgan making retesting new highs. Bank of America retesting new highs. Goldman Sachs retesting the recent highs. LRCX, American Airline. Okay. All right, any other questions? Has the dollar peaked? That is $1 million question, right? That is $1 million. First of all, what's the time frame? Second of all, so the yields are, going parabolically, right? Going parabolically higher. I think this is, 1, 2, very large 3, right? 4 and 5, right? The consensus is that yield are way ahead of itself, right? We actually reached almost, I think, 430 or 440, right? This target Fed rate, 4.5. Or now everybody's talking about 5%. So is it down at, is 2-year down at 4.5? I think it was, what was the highest? 2-year yield. We were at 4.6, right? Is this the end, right? And now we have a reversal to the downside. If you believe that we're going to have a Christmas rally, then yes, the answer is that, we peaked, whether at 4.6, maybe 4.8, I mean, I don't know, but we peaked and then it would drop, right? And that's the only way technology can continue going higher, right? The only way technology can go higher if the yields pull back, and that means the dollar pull is also going to pull back, right? So if the yield is going to drop, if the 2-year yield is going to continue this downward momentum, and the dollar is going to continue the downward momentum, then QQQ is going to go higher, right? These asset classes are extremely highly correlated like never before, right? Almost 1-to-1. There's no exception. There could be divergences for a couple of days or a couple of weeks, but then they're staying together. So again, if you believe, so the first move is, so the question is on the dollar. Has it peaked, right? If you believe in soft landing, then yes, it peaked, right? And then the next move is down, right? If you believe in hard landing, right? Maybe till the end of the year. If you believe in hard landing, then no. Leg down, this is a, Christmas rally, right? This is rally, and this is sell-off, right? So if you said, 1 and 2, 1 by end of the year and 2 by, if you said 1 by end of the year and 2 in the next 6 months, then the dollar will drop and then continue a rally. Any other questions? All right, then that's all I have for today. Thank you very much. Again, in terms of services that we offer, consider joining Elite Circle. You have access to Morning Bell and Closing Bell. If you cannot be there live, you have access to recordings. You can enter your phone, and every time I trade, you've seen some of the trades from today, right? You'll be notified, right? So this is a great way to learn. And I encourage you to decide, always do one contract, right? Always do one contract, especially in the beginning. Doesn't matter what the stock, and decide for your risk tolerance level, what is the appropriate price, right? What's the appropriate option contract? Maybe it's stocks under $100, maybe it's stock under 200, maybe it's under 50, but you have to decide to do only one contract and what the appropriate strike price, right? If you don't trade options, you do stocks, use dollar cost average, right? You can look at my spiders trade, right? Or you can look at the NFC trade and you can see, I don't buy all at once, right? I buy, sell, right? And do in increments of 30%, 50% position, Same thing, NOC. So I do both stock and option trades, right? So you can get exposure to both. So for that reason, I encourage you to participate in services that you can follow live trades. It's Elite Circle, Shadow Trader. If you don't like to trade stock, you just want to do spreads and you don't like weekly options, okay, then Spread Trader or Premium Portfolio. This is monthly trading, once a week ideas, right? If you like to do weekly options or you try to do stocks, then then Elite Circle or Shadow Trader. All right, any questions? All right, Tom, Mark, Mike. Thank you. All right, everybody, thank you very much. Have a great day. Enjoy your time with friends and family, and I will see you closing bell today. Closing bell today. Thank you.